Here to break it all down, Equinox Partners President and Chief Investment Officer, Sean Fieler. Sean, great to see you. Does this encourage, if people want to leave a high tax, high regulation blue state, it potentially gives them more places to go, and is it really benefit to the nation as a whole, is it not, that you've got conservatives who understand the power of flat taxes and low taxes?
Yeah, so I'm a Connecticut resident, and I think we lose population to every state except for New York and New Jersey. So yes, there's a number of my colleagues' friends in Connecticut that have taken advantage of this, and a good friend just moved to Tennessee 2 years ago, so another zero tax state.
Yeah.
Why? Because I understand ideology reigns supreme in a lot of cases, but at some point, just the evidence is overwhelming. I mean, you have these blue states having population draining, capital draining, successful people leaving. Doesn't it become almost like a necessity, it feels like, for them to do something differently because someone else is eating their lunch constantly?
Well, so like in the case of Connecticut, right, you don't have to actually be good, you just have to be better than the state next to you, which in the case of Connecticut is a pretty low bar. And so we have some pension problems, we have some debt problems in Connecticut, but Connecticut's solvent and not about to be insolvent, and a tax rate that's not going anywhere anytime soon.
You just have to stink not quite as redolently.
It sounds like you spent time in Connecticut politics.
Yes,
there you go.
I did. And I've lived in New York and in New Jersey, so it just depends on which way the wind is blowing and depends on the issue. But I wanted to move on to this because we focus so much on cost savings, and with Elon Musk and Vivek Ramaswamy working on Doge. You wrote a piece recently about the pitch to Doge should be that the Federal Reserve needs to stop paying interest on reserves held at the central bank. This only started, in 2008?
Correct, 13 years ago.
And it pays the central bank $180 billion annually to the banks. These are private institutions. It's essentially a transfer payment from the public to these private institutions. And why?
So the Fed wanted this starting in 2006 as a way to make setting the federal funds rate easier for them. They got it in 2008 in part of the financial crisis.
Right.
And the Fed originally used it to basically soak up the excess reserves that they were creating when they expanded their balance sheet so rapidly. But now 13 years on, last year it cost $177 billion. It's clearly a policy we need to revisit. And if we're looking to actually save, costs within the federal government, this is not technically part of the federal budget, but the Federal Reserve is obviously a instrumentality of the federal government, and the federal government gets transfer payments from the Federal Reserve when the Federal Reserve is making money. So this would be, I think, a ripe place to actually save money.
It's not make-believe money.
No, so what would your precise advice be to the Doge guys on this? And if you got your way, what would that look like? What would that mean?
Well, you have a very now smart, savvy incoming chair of the Financial Services Committee in the House, French Hill, who understands the banking sector very well. And I think basically there's probably something that you could do would split the difference, where you would have some obligated reserves that didn't receive a payment from the Federal Reserve, while still giving the Federal Reserve the ability to pay interest on excess reserves and cut that $180 billion bill down by tens of billions, maybe $70, $80 billion a year. Nobody would be happy, but you'd be able to really maintain the same control over interest rates, but then save the federal government quite a bit of money.
But this is not imaginary. It's not like this is something very real in terms of the money that is being spent, that's being handed to these banks.
It's a lot bigger than the $5 billion a year that the Fed spends in staffing costs, which was originally the tweet that Elon Musk sent out just prior to Christmas about the excessive spending at the Fed, which I think, again, is true. 24,000 employees, the set an interest rate is too many. But the numbers and the amount that you can actually save by reducing the interest paid to banks is quite a bit larger than that $5 billion.
Sean Fieler, great to see you. Thank you for that.
Thank you so much.
And God bless you for living in